On today's podcast, I had Alex and Leila Hormozi on. They are the owners of Acquisitioncom, a portfolio of companies doing over $100 million a year in revenue. And we talked about how they go about running their businesses. If you don't know who they are social media superstars and entrepreneurs. Alex wrote a best-selling book on Amazon. It's got almost 5,000 reviews. They sold their company for almost $47 million. They're just doing a ton of crazy stuff. And in fact, they are literally the only people I watch on social media because so much of what they say is applicable to me, whereas, most content you see is very generic and, I guess lower level. And so to hear the tactical things they're doing in their businesses and for their portfolio of companies is really crazy and really interesting. So I think you're going to get a ton of value out of this episode. Now, let's jump into it.
Welcome to the Ryan Pineda Show, where our mission is to invest,
I only expect to make money in things that I understand.
innovate,
It's about believing in the future and thinking that the future will be better than the past.
and inspire.
I am much more likely to hit my goal just due to putting it out there.
You now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I actually have our most requested guest ever. Alex is pointing at Leila. I have none other than, I'll just say the Hormozis. What's up?
What's up?
Thanks for having us.
Yeah, it's good
Honored
to
to
see
be
you.
here.
Yeah, it's good to see you guys. You literally have been the most requested guest. And it's funny because I don't really watch much content or YouTube. And I came across Alex's channel when he first really started getting it going, I think around like 20,000 subs. And I was like, dude, this guy is super smart. Like, how does nobody know about him yet? And I was like, I told a bunch of people, I was like, go watch this guy's sales training. I was giving it to my sales team and everything. And, sure enough, it started just rolling and growing. And then I found out we shared a similar guy with our TikToks. And I was like, oh, dude, link me up with this guy because it's great. And then you started producing content too. And it was just like, now, I don't even know, 6-9 months later, you guys have exploded.
Yeah, people find my stuff and then they find Leila's stuff and then they stop consuming my stuff.
No, it's definitely different stages in the journey and avatars.
Yeah, I would say bigger companies in general probably consume more of Leila's stuff because I'd say more of my stuff is tends to be more promotional in nature and monetization, pricing, strategy, etc. With probably some elements of viewpoints and perspectives that are probably unique, what we were talking about earlier. But Leila's is so this is how you scale a company. And it's a lot of the stuff that people don't know, which is how do you hire, how do you recruit, how do you build culture, how do you incentivize, how do you build comp structures, how do you know what I mean? All these other things that are actually necessary to build a company that people have no idea exist. And usually it's those bigger companies that are attracted to that type of thing.
Yeah, when I watch Alex's, I think you talk very tactical and, everything's really great, but you also go a lot into philosophical things, right?
Yeah.
And whereas Leila's like, boom, this is how you do it. What are you doing? This is very much to the point. Here's how it goes.
Yeah, I think Alex speaks a lot more to entrepreneurs specifically. I think his content is for someone who's an up-and-coming entrepreneur, someone who's aspiring to be an entrepreneur, I think your content just really speaks to them. Mine is not that way, and that's because that's not the nature of my role in the company. So I think I'm a lot more the ancillary roles around somebody like Alex.
Yeah. So for those people who don't know you guys, you want to give a quick rundown of who you guys are?
Yeah. So we are married. We own Acquisitioncom. Before that, 6 years ago, we started a company called Gym Launch, which was where we would fly around and do gym turnarounds. So kind of like gym rescue, bar rescue. We did that for a year and a half. We did 32 gym turnarounds in that period of time. Then we realized it was a very difficult business to scale. And so then we flipped from doing an in-person turnaround business to licensing. And that was when the business really went from, a few $100,000 a month to a few $1 million a month in a very short period of time. And so that business took off in 2018. In 2019, we started our supplement company, Prestige Labs, which sold through that distribution base. So we ended up growing to over 4,500 locations that licensed our materials for basically, it was a white label franchise. That was kind of the idea. So how can we give franchise level support, but allow them to keep their autonomy and their brand for a micro gym owner? And so that was Gym Launch. Prestige Labs was the supplement company that was the physical products arm behind that, so they could all stock their stuff. And we solved a lot of problems that specifically gym owners were struggling with, which is what Prestige Labs was great for. And we gave really, really competitive affiliate commissions. And so that was an entirely affiliate-based company, and that company did really well. or still does. And then the third company we started was Allen, which was a software company that solved the problem of working leads. And so most brick and mortar gym owners get leads from marketing or running ads, whatever, and they don't work the leads. And so it was like this huge issue for acquisition for them. And so we saw where kind of chat was going. We saw where machine learning was going. We figured we could bridge that gap for them. And we ended up being able to double the amount of leads that would show up on average to a gym. And then if we found out that we actually use it on any brick and mortar business. And so that ended up doing really well. And so we exited all three of those last year. So we exited the software company in June of 2021. And then we exited Prestige Labs and Gym Launch in December of 2021. So we sold 2/3 stake of Gym Launch and Prestige Labs to APG, which is a private equity firm, for $46.2 million. And then we started doing Acquisition.com kind of at the same time because that's what we kind of wanted to do next. So we started that. I think the first company we took on was in 2020, June of 2020 or May of 2020.
Yeah, it was let's take on one or two, which we know we could deliver, we could do really well without distracting ourselves from the sale.
Yeah.
But we didn't want to actually full on start another company because our whole goal was that we knew that we had split focus. We had started multiple companies and we do really well with the two of us on one company. Yeah. And so the goal was to divest our majority interest in those companies and then just full on focus on the new thing. And there's so many things that can happen when you sell a company that we were like, dude, we're not going to full on start it until we know that we've sold the other ones.
Yeah. And I can attest to this because I actually had your COO, now CEO, reach out to me. It was pretty much like after we had first talked, maybe like, when was that, 6 months ago or so? Mm-hmm. And he was like, hey, I was a baseball guy too. I know you're a baseball guy. Yeah, Kale. And I was like, oh, tight. And he's like, yeah, I'm the COO at Gym Launch. And I was like, oh, dude, I just talked to Alex for the first time. Like, let's link up. And so we got on a Zoom, and I had him get on a Zoom with my COO for my education company. I'm like, how are you guys getting customers at Gym Launch? Like, tell me how you're doing your sales team. And like, he kind of explained everything to us. Like, he sat there for an hour and like, I was like, wow, there's so many things we don't currently do that we can do so much better at, especially like on the outbound side.
Yeah,
we
outbound's
don't
great.
do any outbound at all.
Oh, that's super cool. I didn't know that they linked up. That's fun.
Yeah, I didn't know either.
He's a savage.
Yeah, Kale's a machine.
Yeah, he is a machine. Well, he's a baseball guy, of course.
Yeah, he's just like, it's funny because people are like, oh, you sold the company. Congratulations. You guys are amazing. And I'm like, dude, it was like, we couldn't have done it without Maggie and Kale.
Yeah.
And so, because obviously anyone that's buying, if they want to see two founders exit that have like the faces of the company, you have to have people who are really strong to take their place. And so they're great.
Yeah.
Why, what was the reason for selling 2/3? Like, why not sell the whole thing or keep the majority?
So we believed that Gym Launch we still do, that Gym Launch is going to be worth a lot more in the future than it is today. And so we wanted to have as much. So I think if you zoom out, the question is, what problem are we solving? And so for us, the problem that we're solving was not liquidity, because we'd probably taken $45 million in distributions up to that point from those those three companies up to that point. So like we didn't need the money, but it was much more, we needed the headspace. And so we needed to not be responsible for all of that stuff. And that might have just been a story that we were telling ourselves, but at least because it was so inextricably linked with our faces leading into it, I still kind of had an identity that was attached to it. And I probably could have done like more pondering and things like that to try and work on it. But like the shortcut was, we'll sell 2/3, we'll still have a big chunk of the business. And we'll be able to do the thing that we kind of wanted to do next, which was Acquisition.com. And if the first two companies that we took on weren't as successful as they have been, I don't know if we would have sold. But the first two companies and all the companies have done very well. But the first two that we've had the longest have just really, really done well. And so we were like, all right, this is what we really want to do. And then we built Acquisition.com, and so now that does about $13 million a month between the portfolio companies.
So explain to everyone like what Acquisition.com is.
Yeah. So we work with internet businesses. Typically, I would say the majority of our businesses are e-learning and training companies as a whole. It's probably 80%. And then 20% are just, I would say, generic service-based businesses. And that's at least the split. That hasn't been purposeful, but that's been what it's been up to this point. And, we know those spaces really well. And so minimum size is $3 million. I think the biggest company we have does, about $6 million a month. And so there's a big range there. in terms of size. So, on the small side, it's $250 a month. On the high side, it's $200,000 a day.
Right.
So it's a little bit different. But, we've done that, 3 million to 30 million jump 6 times now. And so we just really know what that looks like. And so we look for businesses that are right at that range, that have a good leadership team, that have really deep expertise within some sort of thing that they're teaching, because that's a big lever. Like, how good you are at the thing matters a lot. Now, we know the businessing around that to really optimize and scale it and drive profitability and add acquisition channels, increase lifetime value, decrease churn, all that kind of stuff. But taking companies from 3 to 30 that are internet-based, founder-led businesses is kind of the bread and butter. And so that's what we do at Acquisition.
So, your target is to get a, business currently doing 3 million, maybe more.
Minimum,
right?
Yeah.
And, obviously you get the biggest return taking them from 3 million to 30 million plus, right? So selfishly, I have a couple of companies like that in the in the internet space. Yeah. So what are the biggest bottlenecks you see to go from 3 to 30?
Yeah. If I were looking at it, I think to go from 3 to 30, first off is they're typically missing, they don't even have the completed first layer of leadership. Yeah. And then you need that in order to get to usually 10 to 15. And then you're going to need that second layer of leadership in order to get to 30. And so it's typically building out, to get to 10, usually you need like one high level executive. And then you need to fill out that like manager level leadership team. And then in order to get to 30, you need to have really both of those levels. So that's the first thing in terms of people. In terms of like the other pieces of the business, their product packaging and pricing is usually not optimized at all. So typically we have to redo the whole structure. So all their offer structure, all the product, all the pricing, all the packaging, it's just not optimized. They're undercharging, or they're not charging for the right things. They don't know what's actually valuable to the customer. Yeah. And so we help them figure out what's the thing that's actually valuable to the customer, and then who is your freaking customer, right? Because you can say who it is, but like who's actually buying and who's actually like in your Facebook group or in your CRM is a different story. And then I would say that the other two pieces to our data. So getting the data in place, it's really, really tough to scale without that. And so getting them into a system that actually that their team wants to use, because it's one to get you on a system, but the second thing is you have to get them on a system that their team can actually use easily and that has usually a good interface. So that's the third one. And then I would say that the last piece to that is just scaling the talent at the top, which is the culture, which is the soft stuff that we go over with them. And honestly, I think helping that CEO and integrator, it's typically a duo that we work with, just raise up in terms of their level of leadership and the kind of culture that they have, because I don't think that in the beginning they realize how important it is. And so we reinforce that on day one from working with them. And so we really hammer home like dialing in what the culture is, so that as we scale, we don't lose that.
Right. So it seems to me, and I mean, it seems obvious just like talking about it, but like people, like most people they don't have enough manpower yet. Totally. And what do you see as like the biggest needs for hiring? Like, is it on the marketing side? Is it on the sales side?
It depends wildly on the company.
Yeah.
Like if you have a product-driven entrepreneur, they probably have, really good product and innovation, R&D, things like that. Maybe decent customer success. Probably the tracking's usually not in place, and they usually don't have a very clear customer journey. They're not, measuring time to value. They're not, actively measuring NPS or creating customer health scores, things like that we can have predictive metrics around how we're going to drive, lifetime value. But they'll usually be better there than they are on like the sales and marketing front. And so it's really just like, where do we feel like the constraint of the system is, and then just ruthlessly prioritizing and attacking that. And so on the flip side, if we have a very promotion-driven entrepreneur, then it's usually the back of the house that needs to clean up. And so, for us, because we deal with the whole of the company, we attack it end to end.
Right. Yeah, it's funny. Before this podcast, I had this guy's name's Kiala, and we were talking about internet marketers, right? And most internet marketers are great marketers, great promoters. They suck at ops and fulfillment. And then you get guys who are really passionate about what they do, and they just don't want to talk about it, right? We were talking about my buddy Graham Steffen, who we partnered with. He's not the greatest promoter, but great product, right? His product is his content and what he's doing. So I think it's cool to see that. So what would you say, at least on the marketing side, right? Because you got your book, $100 Million Offers, right? Which is all about marketing, which was a fantastic book for anyone who has not read it yet. Go get it. It's 99 cents on Amazon. Like, you can't, you'd be dumb not to buy it, right? So, quick plug there. But, in that marketing book, something that really hit home was all these ways to market that I currently don't market, right? Like, I learned to market on the house flipping side by going direct to seller, right? We would run TV commercials, direct mail, cold call, all that stuff. But when I went to the internet-based businesses, I was like, oh, social media, this will carry me. And it has to this point. And then I've pretty much abandoned, affiliates, outbound, anything like that. Like, what do you see with all these companies you guys evaluate and look at as, like, I guess the bread and butter with internet companies, like, for their marketing strategies? Is there consistency or a theme?
I would say, predominantly, most of them run paid ads and have some sort of strong organic or both. I would say like that's the majority of the companies that come to us. Not to say that that's what we need them to do or what we end up building with them, but that's where they're at usually when they meet with us.
Yeah, I would say that there's the companies we take on versus the companies that inquire.
Yeah.
Most of the companies that inquire have figured out paid ads. Their product is usually not, honestly, like to the point yet where they've figured out a really strong organic stream. We have some companies that we take, when we find those ones, those are usually some of the best because they have a great product. But a lot of the ones that inquire and are at that level usually don't have the organic because the product just isn't quite good enough yet. And so the organic really works against them. And then most of them just don't have the operational fortitude to do outbound. Right. And so they might say like outbound, like, oh, I run ads, and then they DM me in Messenger. Like that's not outbound.
Yeah,
outbound. No. And it takes 8 months to get outbound working. So it's typically just something paid, and it's usually not on brand. It's not aligned with their culture. There's a lot of things. It's not calling out the right person. So there's a lot of room for optimization.
Yeah.
100%.
We get a lot of gains just from just filling in holes. Like the first year, we mostly just fill in holes, and almost like by accident, we'll triple the profit of the company without even like really putting the big stuff in place yet.
Yeah, because it's interesting. We like, we say between 3 and 10 because the thing is that when you take on a business, and we have that are bigger, it's very different. It's fixing. And fixing is taking something, you're basically negative. So it's like when you take on someone between 3 and 10, they're at 0, and you just have to take them to 10. When you take on someone that's at 20 or 30 and they're stuck, you are starting from like a -8, and then you've got to take them to -4, -2, 0. And so it's a lot easier to start fresh.
To give more words around it, they have incurred debt, usually multiple types of debt. They've incurred cultural debt, they've incurred management debt, they've incurred technical debt in terms of their systems that they're operating on. And so we have to basically pay down that debt before we can grow again. So like one of the companies we had, we pretty much almost like maintained for the first almost 9 months, and then it tripled in the next 6 months. And it was just like org structure, move people around, get these people out, restructure this team, fix the compensation over here. You know what I mean? Just like all the stuff that no one wants to talk about, but like that's what builds sellable businesses that have true enterprise value.
Right. If you're listening to this podcast, then my guess is you're interested in real estate investing. Some of you are just starting out, while others are trying to scale their business to the next level. But the problem is, with so much information out there, most people don't know which program or coach to trust. Well, I'm a bit biased, but I believe my company, Future Flipper, can help you get to the next level. We've coached thousands of students from all over the world on how to build their real estate investing business. It doesn't matter whether you want to flip, wholesale, or buy rentals. Our coaching program has everything you need to become a great investor. There are many things that we include with coaching, but to give you a few examples, you're going to get an accountability coach. These are people that have had success in their own business, and they want to make sure that you achieve success in yours. We also have all of our documents, our systems, and processes that I've used to buy hundreds of homes. You can copy and paste them directly into your own business. And we have events where you get to meet me, top-level guest speakers, and other students who are crushing it. My students do deals with each other, and I personally do deals with them too. In fact, at a recent event, I just honored over 20 people in our program that made over $1 million in the last year. So if you want to grow your real estate business, head over to futureflipper.com and apply for a call with our team. The call is completely free, and they can help point you in the right direction whether you work with us or not. So go to futureflipper.com and book your call today. For the last year, the real estate market has been on absolute fire. Prices are at all-time highs, interest rates are at all-time lows, and there is more money in the economy than ever. But with so much competition, many investors are sitting on cash, struggling to find great deals. If this sounds like you, then you need to invest with Pineda Capital. With my network and social media following, we get access to the best real estate deals all over the country. And if you're an accredited investor, you can invest with me on those deals. In fact, last year we purchased a 334-unit apartment complex in Georgia for almost $20 million. We expect it to be worth well over $30 million when it's all said and done. Our goal with each deal is to build in so much equity from the beginning that we're able to refinance our investors' cash out and own the properties together with little to no money into the deal. And the best part is, you don't have to do anything. Our team will find the deals, handle the renovations, get them leased, and eventually refinanced or sold. All you have to do is provide the capital. So if you want exclusive access to our deals before they hit the public, go to PinedaCapital.com to schedule a call. We can put your money to work today to start getting you great returns. So go to PinedaCapital.com now to get access to our deals.
So when you guys are looking at acquiring these companies, are you only looking for ones that people want to sell? No?
Go for it.
No, we align ourselves with whatever the founder wants. Yeah. And so like the way that we get, make money off of, our investments, we align to make sure that whether they sell or not, that's one of the things that why we're not like traditional PEs. Traditional PE is usually incentivized to get someone to sell to a specific buyer within a certain amount of time against whatever the founder wants. Usually they force them to, and they usually have like a drag along right, which means that they can force them to sell. Yeah. We just never want to do that because we're entrepreneur first. And so it's really aligning ourselves with whatever that person wants, which we make sure that we figure out within the first 2 weeks of working together.
Right. So what does a typical structure look like, right? Somebody comes in, they're like, hey, take a look at my business, and you guys do your due diligence on it. And you're like, all right, this looks interesting. You have a call. Like these deals being struck, I've heard you say in the past, you only want minority stakes in these, right? Because you want them to, lead the charge.
Yeah.
So is a lot of this just you guys buying into the company, or are they giving you equity for your expertise? Like, how's all that playing out?
It's a combination. It's a case-by-case basis. We have some companies that we have put cash in. We have companies that we haven't put cash in. The big thing is like, what problem are we solving? And so I would say the vast majority of the companies that we are working with are internet-based companies. They are growing. They are profitable. They have cash flow. And so usually the founders, they wouldn't, if we were to appropriately value the company, it's usually not actually valuable because no one would really buy it because the founder could never actually step away. So it's really just them with 1,000 hands. You know what I mean? And so the valuation would be really low. And for most of them, they don't need the cash. They need the expertise. Mm-hmm. And so for the majority of the situations, it ends up just being cool. We'll take a meaningful enough stake that we care, but not so much so that you stop caring.
Yeah.
You know what I mean? So it's really trying to strike that balance. And then, we have incentives for us to try and triple the company within 5 years. And that's our big, goal that we drive towards. But because we are minority partners, it's basically everything kicks in after we triple. And so that's kind of what we drive towards with those companies. So we get a percentage of cash flow, and we have, some profits, interests, or equity arrangements within the company so that if they choose to sell in that period of time, we're incentivized there. But because of the combination of cash flow and profit interests, which is just a fancy word for equity-like stuff for anyone who's listening, we are balanced in our incentive between holding and selling. Whereas if we were just equity, then we would be over-indexed on just trying to sell basically as fast as we can and get a big multiple on it.
Yeah.
But most of the founders that we're dealing with or that are approaching us are I really want to take this thing to the next level. They're 100% motivated to do it, and they just want more help to get there faster and make fewer mistakes.
Got it. So what do you guys think about just the different options for, having this exit event? It seems like, you guys obviously sold. Mm-hmm. Why not go public or something like that?
For Acquisition.com or for those companies?
For, say, Gym Launch. Why not take Gym Launch public when you guys were doing it?
I think, again, it's what problem you're solving for. Taking it public would have, you would have been the one taking it public. Yeah. And we just knew, for a lot of people, they're building something and it's the right foundation to build more upon. I think you're doing that, right? It's you built the one company that's now building other companies, right? When we looked at Gym Launch, we said, could this build what we want to build within Acquisition.com? And the answer was not eloquently. It would actually be complicated because everything was geared towards fitness. And so we could build a fitness version of Acquisition.com within Gym Launch, and we could, take companies public and do all those things there. But we were do we want to be, isolated to fitness? And the answer was no. We already weren't isolated to fitness in the companies that we were working with. We didn't want to continue to go further into that niche because we have other businesses that we have expertise in. And so we didn't want to isolate ourselves to that.
Yeah.
And so ultimately it was like we could take it public, we could do all these things. We just felt like we were going further down a path that wasn't the path we wanted to go down.
Right. That makes sense. So, I mean, obviously, while you guys were building Gym Launch, Acquisition.com came up as this idea and vision. So, like, what gave you guys the motivation to want to go about that route?
Well, we had one guy who somehow like found his way on my calendar. It's kind of funny. You know, in the first 5 seconds, he was like, "Okay, I'm really sorry. I lied to get on your calendar." And normally I'd be like, "All right, that's not, you know, good." But he's like, "I promise it'll be worth your time." I was like, "All right." And so he gave me his pitch, and he had taken you know, a brick and mortar facility from, you know, a few $100,000 a year, like $1.6 million a year, just using like all the free content that we had put out just for the gym space. So he'd been like super following stuff for a long time, and he'd been doing that for a few years. And he's like, "I really want to take this thing and do what you did with Gym Launch in my niche." And it just ended up working out so well with that particular founder and his wife that I was like, I loved doing it so much, and I really enjoyed being able to just like solve so many problems ahead of time that we had, you know, struggled to figure out. And so the line of growth on that company is faster, bigger, more profitable than Gym Launch was. You know what I mean? And so it was like, man, let's do like, and that's where I think the fire kind of lit within both of us. We're like, this is what I really want to do. And we, you know, we've been in fitness for 10 years. And so we knew we could build a fitness conglomerate and just do M&A and start, you know, buying franchises and buying chains of gyms and buying marketing agencies and things like that within that space, buying fitness coaching companies, whatever. But it's just, and that would have 100% been a great path to wealth or more wealth. It just wasn't the path that we felt like doing. And, you know, I think I talk about this from my worldviews a lot, but like, you know, the marginal utility of money beyond a certain point, you know, decreases. And so we wanted to do different things.
Yeah. No, that makes 100% sense. So, you know, you guys plan to do Acquisition.com for a long time.
Yeah.
Is there any plans to sell it at one point, or?
No, we, you know, obviously any good business could be sold at any point in time is kind of the way we look at it. But
Right.
we said it from day one. We don't want to sell Acquisition.com. We want it to be the foundation that we can build other things upon. So what we're doing right now with it, you know, like we're talking about the types of businesses that we're taking on right now. That's for the first pod of, you know, say, I don't know, anywhere between 15 to 25 businesses, and we'll cap it. And then we might say that we're going to open a pod that's for SaaS or e-commerce, or you know what I'm saying? And so there's variety there. There's different routes that we can take in terms of maybe we decide to buy companies outright one day. I mean, there's a lot of different stuff we can do, and it feels like it would be a shame to then get rid of the machine that builds the machine, right? Which is really what we wanted to build.
Yeah.
So I could see us spinning up other things under Acquisition.com and selling those off for sure. I just don't think that we want to sell Acquisition.com.
Yeah, so we don't want to sell the goose. We want to sell the eggs if we're ever, you know, going to do the exit path. But no, for us, it's, you know, there were a number of assumptions that had to be true for us to kind of hit what we wanted to do. And so it was like, we have to be more popular in the future than we are today. We have to invest in businesses where the marketplace is growing faster than the S&P 500. We have to believe that we can meaningfully drive value to those particular companies, and we have to do business with people that we think are exemplary, and that's both internal and external to the company. And so if those four things are true, then we will be able to, you know, realize this vision. And so that's more or less been kind of the assumptions that everything in Acquisition.com was built off of.
Yeah. So the way I look at it is like you guys are creating kind of like a Blackstone where you're going to have all these companies that you guys own. So do you plan to maybe take Acquisition.com public to get the funding needed to buy all these companies like down the road as you scale, or what's the plan for that?
I mean, we've had plenty of discussions about it. I mean, I like there's things that I do like about the going public part, which is just, you know, all of a sudden your equity is liquid and you can issue shares and you can, you know, have access to debt markets and things like that, which I think are cool. But there's also a lot of headaches associated with being public, and so I think we lean more towards just keeping it private this whole time. And if we want to do something, we can in the future. But like, because of the audience size that we have, you know, if you look at like, we were talking about Graham Stephan and Grant Cardone earlier, if we were to do something, I'd rather just raise funds from the audience and allow them to participate in the stuff that we do, because I feel like that would be like way cooler.
Yeah, I think something more what we would like to do is like, you know, eventually with, say, maybe not the companies we have right now, but a specified pod, we say we're going to grow this pod with the intention that one day we can say, all right, we have now 5 years of returns that we can say this is our return for the last 5 years, and they're fantastic. Now I feel like ethically I could take someone else's money and say, hey, what if we bought the other X% of all these companies in this pod, which we've already grown from day one? So like, what's the likelihood that we're going to continue to succeed with these companies?
So it's like stacking the deck, the stacking the deck in our favor. So, from a diligence perspective, it's not like, okay, we've got this company. It looks really interesting.
We already know.
Right. It's like we've been doing this for 5 years. We've already, 5X the profit of this business, and we know what the next, 5X looks like. And so, we might take this piece, and then the fund takes this piece, and then we still have majority now in the company, so we can, drive the direction even more.
Yeah, no, I love that idea. That's super smart. So let's talk about how you even get these businesses to come to you. So, social media has been something that's drastically changed, the world, period, and business owners as a whole, right? Like, it's like, dude, if you're not on social media, it's like, does anyone know about your business, right? Like, that's just what it seems like. And you both recently came on the scene, like, going full force. What was the catalyst behind that?
Yeah, we can.
Yeah. So I figured with this company, in contrast to some of the other companies we've had in the past, it had to be something that was inbound. And so like true inbound, I would say paid ads is like in between, inbound and outbound. But like, I didn't want to build a company where we're soliciting people saying, hey, we're going to help you grow your business. You don't know who we are. And by the way, we're going to, buy in for a minority. It just like, there wouldn't be trust. There's just a lot of things that would be missing. So I figured that this company would make the most sense to build off of an organic inbound, following, and I didn't have one. And so I was like, okay, well, looking at Grant and what he did with his fund and whatnot, I was like, all right, well, real estate's not my game. But, I feel pretty confident that, high cash flow digital businesses are our game. And so if that's what we're going to do in 10 years, then start today, and that was kind of the thought process a year and a half ago.
Yeah. And honestly, looking at because we both, we're ideating about this business, how you bring in customers affects the entire business.
Totally.
And so even looking at the kind of talent that you can acquire when you have a very volatile acquisition strategy, you're not going to acquire the same kind of talent you can if you have a very stable, reliable acquisition strategy. And so we know that if we can build this moat, which maybe it takes a lot longer to build, that's okay. It's still worth building because of the kind of business that we can build underneath of that.
Yeah. And I agree. Like, most of my customers have been all organic inbound. And so, even when things aren't necessarily going well, if, they don't get the service that they were hoping for, or something happens, they're not immediately like, oh, bad review, scam. They're like, hey, I get it. They're much just more easygoing than somebody that you had to do a hard sell on to buy your product.
Yeah. And I think by the nature of what we do, it's investing and partnering with people. It's not even we talk to the founders of the company every day, pretty much, all of them.
Yeah.
And so I think it's just a very different, it sets the relationship up for success this way, rather than if it were paid or outbound. I just don't think that we'd be set up for success. And I don't think we'd be able to have as much influence in those companies as we do now. And so I think it would be disadvantageous for them and us.
And it's and because our relationship is a minority stake, it's much more based on trust and influence because we don't have majority. So we can't force someone to do something. And so we have to have people who share our values and trust us. And if we're like, hey, we really think you should make this move, and it might seem scary, but they're like, all right, I trust these people, I'm gonna do it. And that happens honestly all the time.
Yeah. Because of just all of the content and value you've put out there. It's like, yeah, if you tell me to do this, I already believe you. You don't need to sell me on doing it.
Yeah.
Yeah.
Trust is a lubricant for doing business. Things happen a lot faster.
Yeah. There you go. So, obviously you guys are putting out amazing content. How much of your time do you think you spend on the content side versus the business side?
It's different between both of us, so you can answer for yourself first.
I would say, the vast majority of our time is on the business and the businesses that we have in the portfolio. We've been pretty good. Caleb's here behind the camera. We've been pretty good about capturing way more of the stuff we've been doing. And so I think that's dramatically cut down. We were talking about this earlier on the actual amount of direct to camera type stuff. But for me, the YouTube channel, I make, 2 to 3 videos a week, which ends up being me usually one day every 2 weeks. I'll just knock out, 4 to 6 videos. And beyond that, I use Twitter a lot. And that's kind of where I test my short. It's really just stream of consciousness. and then that, based on what people find interesting there, that's usually what seeds the short form video content, and we knock those out pretty quickly because those are, I don't know, those are easy for me to do because I made ads for so long. They have similar like pace, to like an advertisement, and so we enjoy doing that. But besides that, it's really just we have the long form videos, we have the short form videos, and we've got tweets, and that's the majority of what we do. And tweets get repurposed as Instagram posts as well, and that's it. That's everything.
Sounds so simple. What about you?
Yeah, I mean, same stuff, but I think I know what with Acquisition.com being new, it would be irresponsible for me to prioritize making content over getting the infrastructure in place. Like, we're heavily investing in talent and hiring and getting the structure in place to scale. And so that, because that's my role in the company, like I actually realized today, I was like, oh shit, like I haven't made a YouTube video in like 3 weeks. And so I told our YouTube guy, because in the beginning he's like, you're gonna do what Alex does. He does 3 times a week. And I was like, I'm not doing 3 times a week. I was like, I'll do like maybe 1 a week. And then he'll be like, dude, we don't have one this week. I'm like, yeah, I don't care. Like, okay. Because it's irresponsible. You know what I mean? Because I'm just always gonna be more internal facing. And so actually that's when, when I said, I really do want to make the content because I think it'll help the companies and help them be more well-rounded if they have both of our perspectives. But I was like, I cannot do direct to camera. It's not scalable. And so I was listening to Gary Vee, and he had this one line where he just said, dude, I'm an operator. He's like, you don't get it. I spend 99% of my time on my businesses. And I was like, I'm an operator. And I was like, I need someone to capture rather than me creating. And that was when we really had the conversations of like, because I kind of came to, I was like, dude, I can't, how are you doing this? And he was like, I don't think I can either anymore. And so we were like,
and
okay.
I've come to that conclusion too.
Yeah.
For the last 2 years, I've been like, all right, I'm focused on building this media business, and it is a business, right? So like making this content and everything, and now I've come to the conclusion, I'm like, yep, you know what? I'm just filming like me doing business, and that's the content now. And that's just way easier. Like, you don't have to like dedicate time to go film live videos.
Yeah, and it's realer. I mean, people are like, I really wish I knew what like your day looks like. It's like, well, this is what it looks like now. And so we're putting more and more of that kind of stuff out there, which is cool.
It's like either you're telling them what you just did, or you're just doing it in front of a camera.
So what's your advice to these founders like who want to get better at organic, right? You were talking about how most of them already got paid media figured out, and they're like, oh, we want to get organic. And they're like, that's why they're coming to you, because they're like, you guys, came out of nowhere, and now your organic is so strong. What do you give them as advice?
I would say first, nobody comes to us and says we want to do organic like you guys. And they actually all know that's not typically a priority for where they're at in business. It's really not for most of them. So that's the first thing I'll say.
And the second thing that I will say, or that she will say, that I will say after her, is that a lot of things is sequence in the business. And so usually 0 to 3 million-ish, is product market fit. So the whole objective of that phase in the business is just, do people want to buy what you are selling, right? And so it's like, okay, you have made some sales. And the mistake that most people make is they think, okay, well, marketing got me here, I should market more. And that's usually not the case. Usually now it's like, okay, we have proven product market fit, but we are not getting any referrals. We're not getting a lot of word of mouth. And unless we clean up all the back end and increase customer lifetime value, put all the infrastructure in place so that we can get more ascensions, build it back, all the other things that are required to really create an exceptional customer experience, you become a only marketing company, and then it becomes very difficult to scale past maybe 10-ish million, because you have so many people falling out the back that you just like every month you have to sell twice as many as you did the month before just to stay the same. And so, for us, it's like, okay, 0 to 3, you got your product market fit. 3 to 10, we have to clean up the back end. And usually just by cleaning up the back end without even increasing the sales velocity or number of units sold per month, we can still triple the business just by massively increasing how much each customer is worth to us and how many customers those customers bring to us. And then at that point, now that we have the expanded LTV, expanded gross profit margins, et cetera, and the infrastructure to scale, then we have these new metrics we can go and attack new acquisition channels and be inefficient at scale because we have so much margin that we can work with.
Right. So talking about churn, in a lot of e-learning, many people buy, say, a mastermind, right, or something, and they go into it knowing that, like, oh, you know what, I'll do it for a year, and then I'll try a different mastermind after that, right? Like typical somebody's attitude if they want to go learn something. How do you keep that from happening?
You mean leave?
Yeah.
Or stop them from leaving? So it depends on, because there's, levels. There's, courses, there's coaching programs, there's masterminds, things like that. we have to separate out the consumables from the one-time purchase. So like education, for example, is a one-time purchase, and information decreases in value precipitously over time. The day before you learn something, it's much more valuable than the day after you learn it, right?
Yep.
And so that's where having information only becomes very difficult from a continuity perspective. The things that are consumable that people can use month in, month out are accountability. They can use tech support. They can use a community. So those are all things that people can consume on a consistent basis. From from increasing the stick, if we increase the quality of the community overall, and if we can appropriately adjust the price to match the value or be less than the value that they're receiving over time. So it's not uncommon to see a year one price be higher than a year two price because the value diminishes once you have access to the network. And then the new value that's being consistently delivered is the new people who enter the network and the new information that comes, that gets put into the programs and the trainings and things like that. And so, but that might be less than the learning of the initial skill. And so it's really finding that sweet spot where we can keep the customers and make sure that we're pricing based on the consumable, not on the one-time thing.
Yeah, that's exactly what I figured out with Future Flipper was, at first people would do it for a year and they'd be like, okay, I learned what I wanted to learn. And like, that was good. But then we realized like, man, people stay for the community, like you said, the network, the accountability, the camaraderie of just coming to an event every quarter, and they love it. And, to make it even sweeter, I did exactly what you said was I cut the second year price in half. And I just said, hey, it's half the price and, it'll be that price as long as you want to stay. And like our retention skyrocketed just from doing all of those things.
Yeah.
Yeah. If you think about it, really, like when people if you look at like anything in customer success, they always put like basically it's results and experience. And so it's just like understanding that most, I think in this space, typically like e-learning masterminds, they have the results there, which is like you're getting the network, you're getting the information, you're getting all of this, but they actually forget about the experience, which is like, did you set expectations properly with the person of what they're going to get even? Because some people join for network versus some join for the education. And then did you onboard them well? And then how often are you talking to them? Are you proactive with your communication? And so a lot of people actually look at Gym Launch and they say, oh, it's a digital, information business. And I'm like, dude, we had a 40-person support team. Because we were so focused on the experience. Like every time someone had a baby, a wedding, a birthday, a holiday, like their first trip, they made a certain amount of money. It's like we're constantly pouring into them. And I think that's the intangible stuff that people don't want to leave because they have relationships. And so I think the relationships and the feeling that you give those people is longer lasting than the education all in all because people are loyal to a person, not necessarily to a thing.
Right.
And one of the points that Leila made there, I'll just zoom in on real quick, which is asking people why they're joining. It sounds really simple and obvious, but people are solving different problems when they're buying the same thing. And so having a personalized experience for how they're going to consume the product and the service at the onset, giving kind of like a unique roadmap is one of those things that will dramatically enhance the value that they're receiving from the program because usually most people deliver way more stuff than someone can consume. And so it's like, okay, how can I give you the shortest path to getting the value that you want the way you want to receive it? And so like that's a huge part. And then, some of the other cool things is using that network effect that you have, for the network, but also for group purchasing power. So if you, let's say just for math's sake, let's say your first year was $12,000 and your second year was $6,000. If you have a group of 200 entrepreneurs or 500 entrepreneurs who are in this network, we have a huge amount of buying power. And so there's normally services and products and things like that everybody probably frequents that may or may not be yours, that you own. And so you can bundle in the savings from the group purchasing power to be in excess of the absolute cost of the mastermind, and then it becomes a savings to be a part of the association or whatever. Right. And so there's like ways that you can stack the value that makes it just so irresistible and such a no-brainer for people to stay that they're like, well, shit. Yeah. I mean, I'd feel stupid to say no, right? And then that's the idea.
As the world starts to go more digital, you need to be aware of which businesses are going to thrive in the future. One of the obvious ones is e-commerce. In fact, last year, e-commerce sales did over $4 trillion globally, and it's continuing to grow. Now, if you're like most people, you probably don't have time to learn a whole new industry and start a new business. But there is another way. You could partner with us at Lunar Ecom. We have over 300 e-commerce stores that we have created and managed for our clients. And the best part is, it's completely passive on their end. The business model is very simple. You cover the cost of creating and running the store. We handle everything else. We pick the products, we handle fulfillment, returns, and customer satisfaction. After all that, we split profits at the end of the month. This means that when you win, we win.
If you want to learn more about how it works, you can watch our case study at lunarecom.com. I believe that the e-commerce space is going to continue to explode as the world goes digital. So make sure you're with the right partner who's going to be ahead of those trends. So go schedule a call with my team today at lunarecom.com if you want to learn about how we can start taking your passive income to the moon. Most people want to get rich at all costs. They make sacrifices with their family, their health, and their faith, all in the pursuit of money without even realizing it. But what if I told you it doesn't have to be that way? What if you could grow your wealth in all areas of life? Well, it's possible, and that's why I created The Wealthy Way. It's a community of people striving to grow together in all areas. And we have multiple tools for you to use that are completely free. You can get access to the Wealthy Way Planner, where you can set goals and hold yourself accountable on a daily basis. We also have our Wealth Builder Academy, which is over 4 hours of content teaching you how to manage your time, create the right goals, and all the biggest secrets I've used to grow my life, not only in my net worth, but in all aspects. Lastly, we have our Discord community where thousands of wealth builders are all over the world encouraging one another and growing together. And once again, all of this is completely free. There are no upsells, there are no hidden catches. For me, this is a passion project, and I want to build a community of like-minded people. So if you want to start living the wealthy way today, go to wealthyway.com. There you can get all the free resources like the course, planner, and Discord community. So go to wealthyway.com.
Yeah, so speaking of, you referenced your book subtitle there, offers, what's the subtitle offers?
How to make offers so good people feel stupid saying no.
Yeah, so, we talked about the book earlier and just like all the different ways to market. And I know you're coming out with a whole series of books and everything else. And the next one's about generating, is it leads?
Leads.
Mm-hmm. And, you've talked about how it's taking a while with all the revisions and everything else. And
it's been a beast.
It's been a headache. And I remember I actually asked you, man, this was maybe like 4 or 5. I go, hey, how are you publishing them? And you're like, just on Amazon, Kindle. And I was like, really? I was like, who's writing them? He's like, I am. And I was like, what about you're like, I'm just doing it. And I'm like, holy crap, dude, to do all of that. Like, I wrote my one book right over there, and that was like 4 years ago. And I was like, I don't think I could ever do that again. That was so difficult to like write it on my own.
Yeah. It's tough. But
Alex didn't write his first book even thinking he was going to publish it. Like, I don't think people realize that. Like, he was literally writing it, and he's like, I don't know if I'm going to do anything with this. Like, I just don't. I think I'm just writing it for myself. He's like, we could actually use it with the companies. It'll be like a manual. Almost.
It's exactly what it was intended to be.
And so then it was like one day he woke up in the morning, and he had said, like, oh, if I'm going to, I'll do it, if I'm going to publish it, maybe I'll do it in like a few months or something like that. It would be like a big launch. I would do this whole thing. And then I kept telling him, I was like, well, if the thing is good enough, which I'd read it like probably 6 times by this point, I'm like, it is fantastic. Like, it's going to blow up. Like, you don't need to do anything. And he was like, and then one day you woke up and you were like, I put it on Instagram, and it's on Amazon. And I was like, it's on Amazon and Instagram? And he was like, yeah. And I was like, what the fuck? And I was like, I don't even know where to log in to like, make sure the shit's going well and stuff. And so it was a little bit of a shit show. But he made one post and no marketing, no other posts about it, nothing. It just literally went viral off word of mouth. I mean, it was insane. People don't believe us. They're like, you had to have pumped something. I'm like, he didn't pump shit. But people just aren't used to actually like how much time he puts into writing. Like, I am not somebody that gets bothered by how much somebody works, but like when he gets into writing mode where it's like weeks on weeks of like, I'm like, hello, are you hungry? Are you thirsty? Like, are you shriveling raisin in there? He's in this closet. Like,
you go in your closet and just turn off the light.
He's so dedicated to it, and it's because he genuinely loves writing.
Yeah.
And I like the books. Like, books are very special to me because like I've learned a lot from reading, and like if you think about like when people die, the only thing that's left is like books. Like, the only thing that has like stayed for 2,000, 5,000 years is like written word. And so I think there's something magical about that. And so that's what I spend a lot of time trying to make it really, really good. And I think there's a big difference between like publishing a book and publishing a great book. And there's just a mountain more of work with like, what I mean? Like, there's probably 20% of the work is publishing a book compared to, publishing a book that the product, the value that people will get is so far in excess of what they pay that they tell their friends about it. And so like if you can achieve that ratio, then the product takes off, and then it becomes its own marketing.
Yeah.
And so that was the goal for the book. And when I told Leila that, I was like, I don't know if I want to promote it because either it's good enough that it will promote itself, or why would I promote it? Because if people aren't telling their friends that it's good, then why would I want anyone else to read it?
Right. 100%. And I think the thing you did that was genius was you made it $1. Like, you know, like the virality of that, you haven't seen many people do that, right? Because like they spent so much time and money to get a book out there and to do the launch, and you know, if they paid a ghostwriter and all this stuff, and it's like to sell it for that, you know, it's like, well, what do I have to lose? Like, I might as well read it. And then like it's kind of like it made me realize too that a book is pretty much just like content. And, you know, we make content for free. We don't charge people to watch our YouTube videos and stuff. And it was like, yeah, that makes it like, why not try it as a book? And so watching what you did with that, and obviously, even if it was $1 and it sucked, nobody would watch it or nobody would share it, right? So it was just like, you got nothing to lose by buying this and just reading it other than your time. And, dude, it's crazy like how viral it's gone. Cause I read it when it maybe had a couple hundred reviews. And then I was looking at it before our podcast. I was like, this thing's got like 5,000 reviews now. What's going on here?
Yeah.
It's crazy.
Yeah, it's been pretty cool. Been very excited about it. Yeah, it comes up on 1 year in July.
Yeah.
So, you know, hopefully we can get 5,500, maybe 6,000 the first year. Which would be cool.
Crazy.
Because then I think about like, you know, what does it look like, you know, 20 years from now? Are there going to be like 120,000 reviews?
Right.
Which would be pretty cool. So, but like, you know, to your point about the pricing thing, it's like I priced it there because like, what was the objective of the book? The objective of the book is that it gets shared and that many people consume it. The objective is not like for me to make an extra, you know, $20,000 a month on a book.
$2 a book.
Yeah, like I just, you know, and Amazon takes 66 of the 99. Like it really, like I did not make a lot of money on the book.
Yeah, we said we want to be able to basically, you know, anything we put out there that's education or information, we just like decided like our brand like is just we want all of it to be for free. So we don't want to make people pay for anything. We don't want to ever sell anything. It's just that's not how we want to make our money.
Yeah, we just make our money doing the stuff. You know what I mean? And so we wanted to just teach as many, like the business model was simple. It's just, okay, we really do this stuff. And why don't we just help as many people as humanly possible, knowing that 99.9% will never work with us and never give us $1, and that's fine. And then of the people who are super executors because they can take the stuff without hand-holding and get themselves to 3 million, 5 million, you know, 8 million, 10 million a year. And then they're like, dude, I used all the stuff. I got past this level. Now, like, I trust you because I used your stuff and it worked. So now I know the next thing's going to work. And then it just makes it for such a better process of finding alignment, getting the right partners. And so it's just big picture. I don't want to sell more like $10,000 things. You know, I want to just find partners that were in it for 10 years and build something really cool.
Do you ever see yourself starting? I know you're not going to charge for education, but do you ever see yourself starting like a mastermind for high-level entrepreneurs?
No.
That
was actually, I'm sorry.
No, I mean,
I feel strongly against that.
Yeah.
No.
But even if you didn't charge, like just, I don't know, as a networking type deal.
I think we've thought about doing like an event.
Yeah.
You know, like a Mozi Nation event or doing a community on like Discord or something like that. So like, we're trying to think of different ways.
Did he tell you to do Discord?
Yeah.
Yeah.
We're putting it together as we speak.
I have 2 Discords right now.
Okay.
Oh yeah.
So they have about 15,000 in them.
Okay.
And Discord's interesting because it's like 24/7.
Yeah.
And it's just like nonstop. People are just always talking, always communicating. It's different than a Facebook group where it's like you got to make a post and somebody might comment, somebody might not. It's like a 24/7 chat room.
Yeah.
Yeah, that's crazy. I mean, yeah, I could see us doing something like that.
It's just, what's the objective? You know what I mean? Like for us, the objective is the mission of the company is to document and share the best practices of building world-class companies. And so we do that by building world-class companies and documenting it, and then we share it. And the key point of sharing is like, we share it so that everybody can have it. And I just, in my bones, believe that the only thing that makes the world better is entrepreneurial businesses. And so the more business owners we can equip with the skills and lessons that, you know, were very difficult and painful for us to learn, then the more good businesses will be out there. And even if none of them ever work with us, like, we'll die and it won't matter and it's okay. And we're happy to just help people out. And we're good with that.
100%. So how is it, you know, working together? I mean, you guys seem like you're just yin and yang. Like, you know, it just works so well just watching it from here.
Does work well.
It does work pretty well.
Honestly, yeah, I mean, it's a tough one because we met and we started working together so quickly, and it's not for, I would say, like 99.9% of couples. And I think also a lot of couples aren't going to work as well together as we do. Yeah. Because I think that we just naturally, you know, like I've always been kind of in this position with anyone that I've worked with, like the integrator to a visionary. And Alex is naturally a visionary. And so I think we met and we had complementary skill sets, and it was the right timing, and we started doing it from day one, and we're both really coachable, and we both take ownership over our shit and don't blame each other. And so I think just who we're lucky that we found each other and it worked so well. But working together is great. We love it.
Do you guys ever how do you split between business and your relationship, or is it all just flowing together all the time?
It flows together. I mean, there are moments where you're like, hey, husband hat, or hey, wife hat, and you need to clearly delineate. But most of the times, the things that we enjoy talking about are the things that we're building together. You know what I mean? And so in a lot of ways, we're talking earlier, the businesses that we build are a lot like our kids. They're the things that we're bringing into this world, and we're raising them and, fostering them and whatnot. And so that's what we enjoy. And we've always kind of decried the black and white, you have to have one date night. You cannot talk about business. You have to, you should, you must, blah, blah, blah.
Makes things so stressful.
I think you can do whatever you want. And this is the life that we like. And this is the marriage. We do marriage the way we envision marriage, and it works within our dynamic. And that's all we know. And so, for people who have similar mission values and, lifestyles, then I think those are the three things that for us have to be in alignment for any kind of long-term partnership. It's you got to want to do the same epic thing. You have to want to get there the same way. And then the lifestyle is how you do it in the meantime.
Yeah. And I think, what people, I'll say this, which is what people see in terms of us in the business setting and working together and doing all of that. We actually do. I have always intentionally tried not to, because it was a pattern when we had Gym Launch, which is I don't want to show husband and wife, Alex and Leila, in front of our team, because I don't want them to detract or distract from business. And so how we are in private when we're not in front of other people is very different than how we are in front of people too.
Very.
And that
How so?
We're super playful, super funny, playful, tons of humor.
We joke around a lot.
Lighthearted, very touchy, that's one thing that I actually, when we had the company, I was because you go just touch your spouse, but in front of the team to be hugging and doing all that while you're leading it quarterly.
Yeah.
That's a little weird. So I try, we've kind of trained ourselves not to do that stuff in front of other people.
Yeah. And if anything, unified front, it's just I would imagine it's just like parenting, right? I mean, I don't have kids, but I would imagine it's just like parenting. Unified front, we don't disagree publicly if there's ever anything. If there is anything, we're hey, after the meeting,
talk about it in private.
Yeah, I thought we were not doing that.
Yeah.
Where did that come from?
Yeah, it's oh, I thought you were talking about this. Ooh, my bad. I'll let them know in Slack. No big deal. You know what I mean?
Yeah, just being sensitive to other people in the room. I think especially so many people are hesitant to work for a husband-wife duo because they're worried about the stability of the relationship and how you disagree and how you solve arguments and all that stuff. And the last thing we ever want to do is bring any sort of personal element in front of our team, besides I would say our intermediate team, which is Caleb, who does video, he's going to see us together in our own element, and same with our EAs. But besides that, nobody really sees.
Got it. So with all these businesses you're buying, how do you factor in the economy? Because I've heard you talk about this on your videos, talking about the vehicle at which you're in, right? If you got a ship that's got a lot of wind behind it, it's way easier to go with that, right? And so we see the economy doing whatever it's going to do. How do you guys navigate this?
So I will take this. So one is, what's the marketplace we're going after? So the marketplace that we're going after is e-learning, which as a category is set to 2.5x over the next 5 years. Now, compared to anything else, that's great growth. So from a the wind behind the sails perspective, we've got that. And I think a big part of that is because formal education is being disrupted. I think because a lot of people are looking or seeking out alternative education sources to make money, right? And this is not me decrying or saying college is bad. It's just that a lot of people can't afford to spend 4 years and $100,000 and not make money for that period of time to then make the same amount of money that they could just not doing that experience. And so the opportunity cost is massive. And so I'll say it differently, is that the demand for income producing skills has not gone away. The supply of the formal supply of it has. And so they are seeking out alternatives. And so that is why that market is growing. So number one is that. Number two is that in a, bad economy future, especially an inflationary environment, businesses that have low capital expenses and high cash flow tend to be businesses that fare better because there's easier pricing power, and because you don't have to, put capital back into the business to expand it. It's easier those businesses are more flexible. And so the types of businesses that we work with are by nature low capital expense businesses, high cash flow. And so for those reasons, we feel really well equipped for, an inflationary period that might come in the future. Everybody has a plan until you get hit in the face. But we feel as far as we can see, we feel pretty good because things have to go on. And so it's like, okay, well, if we can mitigate these risks, at least then we can trudge forward and deal with things as they come.
Yeah, I mean, it comes down to they're very flexible businesses. Yeah. And so if you have a flexible infrastructure and you have a flexible model, and these aren't businesses with huge capital expenditures and giant buildings and real estate all over the freaking world, it's not going to be that hard to pivot. And honestly, like during COVID, we had to pivot all 3 of our businesses. Was it easy? No, it was a pain in the ass. But did we do it? Yes. And it was something that made the companies better off. And so we factor that in when we're looking at the entrepreneur. And are they the kind of person that could, do well in economic downturn, and then the company as well?
And most people in an economic downturn, like the demand, again, for income-producing skills does not go away.
Right.
The demand for, other things that are like nice things might decrease. But like when there is no money, the demand for money is just as high, if not higher. And so and many of the businesses that we have teach kind of niched income-producing skills. So it might be, how to fix a hair salon, how to be a plumber, how to whatever. And so those are, I think, always going to be in demand.
Yeah.
Second to that is we do try to pick people that we believe are market leaders or could be market leaders.
Yeah, that's a big one.
So we're not looking at people that are distressed or that we don't think have the potential to take over their specific niche. Yeah. And so typically in an economic downturn, the market leader survives. And so we feel confident that those people could do that.
Right. When you guys look at these different businesses, you're talking about market leaders and, as far as in the space and generating revenue and everything. But, like a lot of businesses, probably like Gym Launch early on, are very dependent on, the founder, right? They're the face. They're driving all the traffic. Even today in many of my businesses, like, dude, if Ryan stops making content, where are the leads coming from, right?
Yeah.
What do you guys do to address that, if any?
You mean so that we could like potentially exit them in the future kind of thing?
Yeah.
It's always, honestly, with all of them, that is part of the plan. Yeah. So that's something that takes, I want to say if you're starting and you're like, I want to sell my business and I want it to be like rock solid, maybe it's 18 to 24 months.
24.
I would say if you want to do it right and like really rock solid, 3 years. So most of these companies, our 3-year to 5-year plan involves that. So it's how are we going to basically like, diversify our risk of the founder, because at some point, if they want to exit, I think most of them want the freedom to choose, right? Like they don't necessarily want to exit, but they would like the freedom or the opportunity to decide at that point in time. And so we are always setting them up for that. And so it's I think that it's more complicated when you're the founder than when you're somebody like myself looking at it, because I look at it like, you just have to put other people, for every Alex, I need like 10 people, right? Yeah. And that's all it is. It's just the 10 people that fill those skills gaps, and then the 10 people that can, essentially act as characters to fill in for one face.
Right.
So can 10 people fill the gap of one Alex? Yes. Is there more operational complexity? Yes, but it's a more sturdy business. And so oftentimes, like a personality brand, it's basically diversifying and going from like one personality to like, you go to Disneyland, it's not just Mickey Mouse, it's all the characters. You've got, you've got Alice in Wonderland and Snow White and like all these people. It's like, how do we create that within each of the businesses? And so, a lot of those businesses, they have people that, are niche experts teaching their, customers because they're coaching businesses. And those people typically, you kind of make subject matter experts that can take over a different subject matter. And then the other one is taking, their leadership team and kind of like raising them up to be more forward facing, kind of taking the internal and making it external. So there's a few different ways you can do it, but it's just a process. And if you do it over time, it's honestly not that hard.
Yeah. You pretty much described what I've been thinking. 'Cause like, I don't want to sell, but I'd like to have the option one day. Right. And so we started thinking about this at like the one I'm most prevalent at, which is the real estate education business. Right. And so I said, you know what? We're really good at making content. Why don't we just produce it for other people in the community, right? And so we took like our best students who I thought were great on camera. We took our coaches, everyone else. And so we created a whole separate YouTube channel, Instagram, everything else. And they're growing really quick just because our post-production team makes them the exact same. Like it's just send us the videos and we'll make the thumbnails and everything else that we know works.
Yep.
And so that's actually helped out a lot. And like, we're launching a new podcast. I am not the host, and just trying to diversify.
I think the more that you edify those people.
Yeah.
So it's like the more that one you associate with them, like you're seen with them before they're on their own, and then you edify them when they are on their own, and you consistently do that over and over and over again.
And just like as an added point, because this is the subject of the next book, so I have lots to say on this. But like typically, if it's a founder face forward thing, then it's going to be through paid ads or organic for the most part, right? And there are so many other ways to get customers. And so it's like, okay, well, how do we get an affiliate channel set up? How do we get a referral, a really strong referral program in place? How do we get a big manual outbound team set up? How do we do huge blasts, to different lists that we can hit? And so there's these different things that we can set up, and we can do that. And by building an employee team, we can build customer teams, we can build affiliate networks. All of those things we can do that are not founder facing at all. And I can tell you that when Gym Launch, the sales past 50% of total sales came from the outbound team, I can't explain the amount of like peace of mind to just know that every day we're doing 5,000 dials, and that's going to turn into 100 grand or whatever. You know what I mean? And so we just know that if I die tomorrow, all these people have jobs, all these families are secure, mortgages are paid, like everything's going to be okay. And that's why, a private equity or whatever feels comfortable coming in to purchase a business like that, because they're like, oh, they're not only diversified across channels, but they're diversified across methods of acquisition.
Right. It's not just social media.
Right.
Yeah.
Exactly. That's just like one, right? Like we could cold call, we could cold email, we could cold DM. Like there's so many different ways that we could do this. We could do paid ads to get affiliates and then build 1,000-person affiliate. Like, so Prestige Labs was 100% affiliates. It was all affiliates.
Yeah.
3,000 affiliates. Allen was 100% affiliates. We actually had super affiliates. We had a 2-level affiliate set up in Allen, because for the same reason, I was like, I didn't want to be the face of this. And so there's so many ways you can do it. And even in the paid ads, you can put the mascots, but you can also put your customers more, right? Have the customers and the results and the experiences and the workshops and things like that be far more prevalent, because at the end of the day, like they don't really care about us. They care about what they see in us. They care about what they relate to. And so if we can draw that line, or just kind of like lean into that more, we can kind of like step off camera, and it's like, oh wow, this person is just like me, and this business helped that person succeed, whatever.
Yeah. No, I love that. So you mentioned that if you're going to replace the founder, it might take 10 people to replace Alex, right? What are you guys doing to recruit top tier talent?
For ourselves?
In general, for you, and helping the founders, hire better.
Yeah. I think that, we're at a point now where we're attracting a lot of top talent, which is something that I haven't had for the last 6 years.
It's unfair. It's really like an unfair advantage.
It's not unfair.
And that's what I've experienced
It's just
too.
been
I tell
accumulated.
I tell people, I'm just like, I make a post and we get so many hot applicants, and it's great, but like that's not the reality for most people.
Yeah, so for most people, I mean, like when we had Gym Launch, like to get top tier talent is an investment. I think that there's 2 ways that you can get it, which is one, you can go through your network and you can try and literally like pull whatever favor you can to get your first top level person. And if you can get one, that edifies you to every other person that you're ever going to talk to, that it's not a crazy idea to join your company, right? So like for Gym Launch, like we got our CFO, and I'll go with the second way, which is using a recruiter or paying somebody to go recruit if you don't have that in-house, because the thing is a lot of people don't have recruiters in-house. They also don't have the time to dedicate to really finding the right kind of person. So, I mean, we forked out a lot of money on a couple positions, and I'm glad, because once you have 1 or 2 people that are top tier talent that you did pay a lot of money for, then those people have networks, and then those people also edify you, so you start to look more legit, so it starts to legitimizes your company. And so then you do attract talent more naturally. Whereas in the beginning, you just don't have that advantage. So you don't have anything to leverage besides your money. And so it's, either your time, you can try and DM and, on LinkedIn and crap yourself, I guess, as a founder, which, I mean, I've done it. Or you could pay a recruiter to do it for you to find that talent. I really just think, like, we basically gotten in, I'll tell you how we found our CFO. We gotten in with one of our friends who said, I can get you with this recruiting company, but they typically only take companies above 100 million. And at that point, we weren't there. And he was like, but I'll tell them like how fast you're growing and all this stuff. And so because of that, we got to use them, and because their name, their brand of recruiting, right? So when they reached out to somebody, they're like, oh shit, they were literally number 1 in the nation. So they're like, I'm going to answer to them because they're the number 1 firm. And so I think you have to associate with somebody else's brand if you don't have a strong enough one. And so for our companies, like at Acquisition, when they were trying to fill roles for them, like we do leverage ours to find people for them, because we have so much inbound, like, hey, do you need an operator for a company? Do you need a sales manager for a company? So we can just throw that back into the
And it's a big
companies.
competitive, that's a big thing that we can help with the portfolio companies, because also, like, to her point about like the legitimacy, if they're like, oh, your portfolio is doing, 150 million a year, they're like, okay, like I feel much better that you guys are all on board on this, and you guys are an investment firm that's really like sees something here too. So then they feel way more at ease. And so we will, we'll screen and vet some of the final candidates, especially like leadership and up. And so like we can attract them, we can vet them, and then we can place them. And then it also gives us, from an operating perspective, we get multiple lines inside of the business, so we know what's going on. Because it's, sometimes the founder doesn't communicate all the time because they're busy, whatever. And so we have other people who are in the company that know and like and trust us too. And so it gives us so much more intel into how the business is doing, so we can keep a much better pulse on what we can do to help them.
So you're telling me Acquisition.com is a recruiting company now?
I mean, that's actually it. Yeah. Because when we were deciding what we wanted to build, Alex was saying, this is what I want, and I was saying, this is what I want. And then we kind of put something together. It's always like a mesh of the two. And so like what I really love doing is finding talent for people. Like I love doing it for my own teams. And so I was like, I think I'm good at it, and I think I'm really good at helping people with it. And so that's why we decided like the most hands-on piece that we are with the businesses is recruiting. So it's recruiting their leadership.
And that was the number one thing you said from the beginning. You were like, people.
Yeah.
Like, that's what they all need.
Yeah.
And it makes sense. Like that's the thing you're helping probably the most with.
It's the phase of growth that they're in. So part of it might just be that tends to be the problem that most of them are at. And so we have morphed ourselves into becoming like the best solution for that thing. I don't know if it's the chicken or the egg, but just the more high quality people we place into enterprises where there's a deficit, the faster the growth is. And so we just, like, everyone's one hire away from the business of their dreams.
Yeah. No, I 100% agree. And I mean, for Acquisition.com, it gives you guys so much of a competitive advantage. Not only just like, we're going to potentially give you money. You're obviously going to get our expertise, but by the way, you're getting our network too.
Yeah.
It's like Shark Tank.
Yeah, 100%. Yeah.
That's super cool. Well, I really do. I could talk all day to you guys because there's just so much, you guys have going on and your knowledge and everything. But, I appreciate you guys coming on the show. It's been a lot of fun, and I know the audience got a lot of value out of it. So, yeah.
I mean, we appreciate you having us on.
Yeah, and I
It's
appreciate
only a 15-minute drive.
Yeah.
That's true.
No, and I appreciate the questions, because it was, we don't get to talk about like as
Our
much
business.
higher level business stuff or what we do every day that often.
Never.
Never. So this was actually really fun for us, because we almost
This is
exclusively
what we talk about this stuff every day.
This is all we talk about.
But nobody asks us about it.
Yeah, I have no one to talk to about it.
Yeah.
So, they were all just selfish questions that I've been wondering.
Well,
That was good.
we like talking about. So
Yeah.
Perfect.
Cool.
Well, cool. Guys, if you like this episode, definitely go check them out on social media. We'll link to all their links below. If you got a business that's got $3 million or more in revenue, go hit up Acquisition.com. They'll help you out, as obviously. And, if you like this podcast, leave a 5-star review, share it with a friend. Catch you on the next one. Peace. Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.